Today we're looking at an analytical report titled Small Cap Gem, the blue laser tech stock starting to explode.
Right.
It's a really deep dive into BURU Inc., ticker BURU, and this pretty dramatic pivot it's making.
From a pre-revenue laser company to, well, a full-on defense tech platform.
Exactly. Through these big European acquisitions, Technia and Orbit.
And that pivot is, I think, the strongest part of the analysis. It's laid out very clearly, but to really make it land with maximum impact, we need to talk about the framing.
The context.
The context, yes. The dramatic financial reality needs to be woven more centrally into the core transformation narrative to properly frame the investment case.
I noticed that too. It's like you get all this excitement about the future, but the urgency of the present feels a bit diluted.
Absolutely diluted. The weakness here, as it's currently structured, is that it presents the really high-risk financial data as a separate reality check.
Right, later on in Section 3.
Later on. And we're talking about, Q3 2025 having $0 in revenue and a $22.4 million net loss?
Which is a huge number.
It's a massive number. And by isolating that from the main bull case, the report kind of minimizes the immediate feel of the volatility. You don't get that sense of just how desperate the situation is.
Even though it calls it a high-risk, high-reward penny stock?
It says the words, but you don't feel it until your page is in. And for this kind of analysis, that feeling is critical.
And isn't that financial distress the very reason the opportunity exists? I mean, if they were already cash flow positive, the stock wouldn't be trading at 24 cents.
That is the entire point. The risk is the opportunity here. And this structure, it almost feels like it's trying to shield you from the scary numbers until you're already sold on the upside.
But with a turnaround story, that's getting it backward.
Completely backward. So the suggestion for improvement is really critical here. The report has to immediately juxtapose the high growth potential of the acquisitions with the company's current, very distressed financial state.
So you create that narrative tension right from the jump.
You have to. The reader needs to understand that this pivot isn't just a good idea. It's a fight for survival.
Okay, so how do we do that in a concrete way? How do you take those raw numbers, the zero revenue, the big loss, and integrate them without just, scaring everyone off on page 1?
It's about framing. When you're introducing the acquisitions, Technia and Orbit, you explicitly connect them to the financials. You say, the stock is trading at these distress levels because the market is waiting for these deals to close and generate cash.
You make the cause and effect explicit.
Exactly. And for a concrete example, you can take management's own forecast. They're targeting what? About $500K in billings restarting in Q4 2025?
Right, that's their initial target.
So you use that number as the direct counterpoint to the current $0 revenue figure. It becomes the light at the end of the tunnel. It makes the acquisition strategy feel like the immediate, tangible solution it is.
So the argument becomes, here's the financial hole they're in. And here, right here, is the first step out.
That's it. You could even reframe a section title. Instead of something generic, maybe the acquisition lifeline, a path off the financial floor. It makes the risk and the solution completely inseparable.
I like that. It's a really powerful reframing. And it turns that financial weakness from, a simple caveat into the actual engine driving the whole story.
It does.
Which I think leads us directly into our second point, which is about the overall organization of the core thesis itself.
Yes, optimizing the structural flow. Because, like you said, the material frames this as an M&A growth story. The structure just needs to fully commit to that.
And if the M&A is the lifeline, then the structure has to reflect that priority.
It has to. So, reordering the core thesis section would better support the report's own conclusion that this is fundamentally an M&A growth story, not just a technical laser story.
Right now, the weakness is that Section 2, the core thesis, it starts with the blue laser edge as Pillar A.
Before it even gets to the European acquisitions, which is Pillar B.
And that just feels off.
It's a major structural hiccup. The report itself calls the acquisitions the real growth driver. They bring immediate revenue, NATO contracts, high-margin recurring software from Orbit.
All the things a zero-revenue company desperately needs.
The fastest way out of that hole. So by putting the technology first, you're just slowing down the momentum of the main investment thesis.
Let me play devil's advocate for a second, though. Couldn't you argue for leading with the technology? I mean, isn't the blue laser IP the actual long-term competitive moat here?
That's a fair question.
If you lead with the M&A, do you risk making it sound like just another generic defense roll-up? You could dilute the unique tech angle.
And that's a valid concern, but it comes down to prioritization and immediate relevance. If the company is on financial life support, the most compelling argument is the fastest path to solvency.
Okay,
The technology is the differentiator for sure, but the M&A is the catalyst. So the suggestion here is to prioritize that acquisition story.
Flip them.
Just flip them. Structure the report to show how the company is first transforming its revenue base, and then introduce the blue laser tech as the unique foundation that's going to differentiate the combined company.
Ah, so the tech becomes the reason the M&A will produce superior results instead of being the main reason to invest in a company that currently makes no money.
That's a much cleaner, much more logical flow. You establish the crisis, you show the immediate path out via M&A, and only then do you reveal the secret weapon that makes this particular M&A so unique.
That makes a lot of sense.
And for a concrete example, it's as simple as swapping pillars 2A and 2B. You start the bull case by detailing the immediate benefits of buying Tecna and Orbit. That immediately answers the question from our first critique. How do they fix this zero revenue problem?
Okay.
Then you follow that by introducing the blue laser as a strategic IP being repurposed for, military-grade 3D printing and directed energy. You link the core tech to the new market access they just bought.
It changes the narrative from cool tech looking for a home to strategic M&A supercharged by unique IP.
Exactly. It's a fundamental shift.
And that structural change moves us perfectly from the big strategic shift to looking at the core asset itself, which brings us to the final point, sharpening the significance of that technology.
Right. We have to make sure that the technical brilliance of the laser isn't just some general asset. It has to be an explicit tactical advantage in this new context.
And the report needs to more explicitly bridge the gap between the blue laser's established industrial advantages and its specific new defense applications to clarify its strategic relevance to the pivot.
I mean, the groundwork in this section is excellent. It's very clear about the laser's technical superiority for welding copper and aluminum.
Right, faster, cleaner than infrared lasers, which is a huge deal for EVs, aerospace, all those high-growth sectors. That technical foundation is solid.
It is, but here's the weakness. The subsequent mention of its defense application, military 3D printing, directed energy, it's just a bit too general.
It feels like an afterthought.
A little bit. It doesn't specifically link that faster, cleaner welding benefit to the needs of the new defense strategy. So you're telling me this laser is great at welding aluminum. Okay, so what? Why does a NATO procurement officer care?
The reader is left to connect the dots on their own.
Yes. Why does this specific industrial tech matter to a defense contractor like Tecna? The industrial benefit is quantified, but the tactical benefit is still fuzzy.
So we need to elevate the technology from just being a nice piece of IP to being a specific, strategic enabler for the defense pivot. What does that tactical advantage actually look like?
That is the exact question the report needs to answer. In defense, everything is about speed, weight, and durability, right?
Right.
So the suggestion is to connect the laser's core competitive advantage directly to the value proposition of these new defense entities, and, crucially, to the joint ventures that are supposed to leverage the tech.
The value has to be quantitative or tactical. It has to match the precision of the financial analysis.
You need to explain how the industrial advantage translates into a military edge.
And if they're buying Tecna, which does military vehicles, and they're getting into the drone market, the laser has to enable something structurally better.
Precisely. And for a concrete example, just look at the Maddox Defense JV. The report mentions it's for building next-gen military drones.
Okay.
Don't just state that the JV exists. Explain how the ability to weld copper and aluminum faster and cleaner translates into something tangible.
Like lighter airframes?
Lighter airframes, stronger structural integrity for harsh environments, or, and this is a huge one, more rapidly produced military assets to meet surge demand.
So you're directly showing the tactical relevance.
It makes the strategic IP feel essential, not just like some asset that got carried along for the ride. It shows that the technology is the engine for superior products in the defense sector.
That integration really does create a powerful causal chain for the whole analysis. You've got the financial distress forcing the M&A pivot.
Which opens up the lucrative defense market.
And then the core technology provides an immediate tactical edge within that market that justifies a whole new valuation.
That is exactly how you maximize the impact of a high-stakes report like this. The analysis moves beyond just, listing pros and cons. It lays out the necessary path for that explosion narrative to actually become a reality.
This was a really strong submission. The work that's already been done defining that strategic pivot. I mean, from a zero-revenue laser company to a NATO-aligned defense contractor, that's what makes the whole thing so compelling.
For sure. And we focus today entirely on tightening that structure and maximizing the tension in this distress to defense story. So to recap our three main areas for strengthening the report. First, a much tighter integration of that severe financial risk right into the main narrative to build urgency from the start.
Right. Then, second, optimizing the structural flow of the core thesis by prioritizing the acquisitions, Techne and Orbit, as the real growth driver and the immediate revenue lifeline.
And finally, sharpening the significance of the blue laser tech itself. You do that by explicitly linking its core industrial benefits, that faster, cleaner welding, to specific tactical defense applications.
Using